Federal Reserve meets this week to make a decision about rates. We are getting some common sense from Craig Bolanos on what the latest CPI gauge on inflation means to the Fed and to investors. Craig is the CEO and founder of Wealth Management Group. So, Craig, what are your takeaways after CPI nudged up just a bit?
Well, Angela, after some consternation over stickier prices and the potential for a re-acceleration in inflation from that January inflation print, I got good news to report. The most recent data, I think it puts those worries to rest. And here's a couple of key takeaways. So the inflation, the core inflation that is month over month, it ticked down. But I know people were worried over the initial headline because the year over year inflation ticked up from 3.1 to 3.2%. But if we delve deeper into the numbers, we once again find that the culprit was shelter or housing costs. But when we look at all of the other data drivers that make up CPI, I think it points to some lower inflation readings heading into the future.
You sound very optimistic, Craig, that inflation will go down. What exactly will that mean to investors?
You know, let's just hit the most important points. The Fed focuses on a measure of inflation called core PCE, personal consumption expenditure. And some of the CPI components flow into core PCE, but very importantly, some do not. And what that sets up for is, I think it sets up for a core PCE reading that's going to be softer than what we saw in the CPI print. And Angela, we have to recall that the Federal Reserve, the chairperson, Powell, he said the data is going to end up being choppy. And you know what? He was right. It's been choppy. But the Federal Reserve also said the data doesn't need to be good. The data just needs to continue to get better. And I think that's exactly what we're seeing. So I also think that at the end of the day, this most recent CPI reading comes down to this. It was better than it looked, in air quotes. And we have a Fed now that's getting more comfortable with the downward trajectory in inflation. So to your point, what does it mean? I think the rate cuts are still on schedule to start in June. That means this market remains intact. The Fed backstop remains intact. We just got to hope we don't have a growth scare. Investors should be using this as a time to stay engaged with their positions, their disciplines, and also make sure they're building out bond ladders, bullet strategies to lock in yields. Savers, similar story. You might just think about protecting some of those high yield money market accounts by locking in treasuries today. I'm Craig Bolanos, the CEO and founder of Wealth Management Group. We exist to help people just like you, our audience, get retired and stay retired. If you want to learn more, you can. Go out to our website, investwithwmg.com.
Go to businessfirstam.com for where to see our show on TV.